All right. All right. All right. Hello, everybody. My name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting, and today we are going to be going live from YouTube for the first time. I ask that you all bear with me. I kind of, you know, play around with it a little bit, catch my bearings, whatever the case is. But today we're going to be definitely discussing our LLCs, legal separate entities. Yeah, I think that there's a lot of confusion around that. And I want to be able to at least provide individuals with some context around what an LLC is and are you really separate? Is it truly a separate legal entity? So here we go. I am going to first get my screen shared and we're going to go from there. All right. So, first and foremost, what we need to understand is whenever we get an LLC, you go to register your LLC at the Secretary of State. People tend to do is they go get an LLC, and the first thing that they do is go get an EIN number. Now, chances are they probably didn't ask the IRS, do they need one or do they qualify for one or things of that nature. So today I'm going to show you all what happens when you go apply for an EIN number and you're trying to get an LLC. So I am on the irs.gov's website, and we're going to go ahead and EIN number. We're going to go ahead and apply online. And we're going to go ahead and begin the application. So a couple things I want to go ahead and, get out of the way because I want people to really understand this. Oftentimes, when you're dealing with a CPA, tax professional, or things of that nature, you may have heard that, your business does or does not make enough money to be this or to be that. And, sometimes a business owner, you can actually be given improper information. You must know that when you open a business, how much money you make has absolutely nothing to do with the way your business is viewed. Again, you have to open the business before you can make a dollar. So whenever you hear someone saying you have to make a certain amount of money to become this or to become that, that can't necessarily be a true statement because the IRS is very clear that when you're getting the EIN, before applying for the EIN, you should have already determined what type of legal structure, business, or type of organization is being established. You will notice here that it does not say that you have to make a certain type of money, right? A certain amount of money, rather. So, whenever you select limited liability company, a limited liability company is a structure allowed by state statute and is formed by filing in articles of organization with the state. Interestingly enough, you go get your EIN number from the irs.gov. You don't get your EIN number from the state. So whenever you select LLC, the IRS is very clear when it says you have a limited liability company. It gives you everything about the LLC in regards to what it is. It says an LLC is a company allowed by state statute. It is formed by filing in articles of organization. It must be unique in each state. There cannot be more than one active LLC with the same name, etc. For federal tax purposes, an LLC may be treated as a part of a corporation or be a disregarded entity, disregarded as separate from the owner. And generally speaking, typically when someone goes to their own business by themselves, they are a disregarded entity. But what's more interesting is the IRS is very clear what it is not. LLCs are not incorporated, and then they do not file in articles of incorporation. Well, what does that mean? Incorporated means, and I'm gonna go ahead and make this bigger for you. A business is incorporated when it has been granted a charter legally recognizing it as a separate entity, having its own privileges, rights, and liabilities distinct from other businesses and persons. Automatically, this should be a very clear indicator to you that under no circumstances can an LLC be a legal separate entity because it has not been granted a charter saying so. LLCs file, as I've mentioned, articles of organization, and they do not file articles of incorporation. So this is a very, very interesting perspective, because generally when people open businesses, the intent is for the business to be separate from them. But here, as you can see, LLCs are not incorporated. So what is an LLC, and why is it such a big push? So many people give you all some pure definitions. As we've already discussed, an LLC is an unincorporated association. According to the FDIC, an unincorporated association is defined as an association of two or more persons formed for some religious, educational, charitable, and social endeavor, if you will. And here we tend to see the a very good correlation between that idea of two or more people. So we must first understand, when did the first LLC begin? The first LLC started in the state of Wyoming in 1977, and it's and basically 41 of the 50, 42 of the 51 jurisdictions didn't even accept the first LLC until the years between 1992 and 1997. Go ahead and try to see if I can. I can't really move that. My apologies. So people confuse a legal structure with the way that the business operates, if you will. And the legal structure is just more so of the organizational framework of how it intends to operate. It has nothing to do with the legality in regards to whether or not it's a separate entity or not. And according to the IRS, the most common forms of businesses are sole proprietorships, partnerships, corporations, and S corps. The limited liability company is only allowed at the state level, as we have stated before. But one of the other interesting things is owners of an LLC, according to the IRS, are called members. The definition of a member is a person, animal, or plant belonging to a particular group. And typically, whenever you try to open something by yourself, you can't be a part of a group by yourself. And for that purpose, the IRS identifies you as a disregarded entity. And the definition of disregard is to pay no attention to or ignore. Now, I want to kind of bring your attention to something, because we had first started talking about and I want to kind of bring your attention to, do you even need an EIN number, right, as a business owner? And most people didn't go ask the IRS if they even needed an EIN. And according to the IRS, you will need an EIN number if you answer yes to any of the following questions. So that means any of the questions that the IRS asks, as long as you can answer yes to them, then you should have an EIN number. And for most people, if you don't know what an EIN number stands for, the EIN stands for an employer identification number, and an employer has employees. Employees are individuals that whenever they show up to work and they put in an honest day's work for an honest day's pay, they are paid on a paycheck, and automatically taxes are taken out of the check. So if you are a business owner and you're paying someone and you don't have taxes automatically deducted from their pay, they are what's considered contractors and they don't qualify as employees. So whenever you go onto the IRS's website, the IRS asks, do you have an employee? Yes or no. Does your business operate as a corporation or partnership? And generally, for people who have LLCs, the answer to that would be, do you file any of these taxes, which is employment, excise, or alcohol, tobacco, and firearms? Do you withhold taxes on income other than wages paid to a non-resident alien? Does your LLC offer a KEO plan, in other words, a retirement plan, pension plan? And is your LLC involved in a trust, an estate, real estate mortgage investment conduit, a nonprofit organization, a farmers co-op, or a plan administrator? If you can't answer yes to any of these questions, you shouldn't have an EIN number. Now, generally, when I do, you know, provide people with this information, some of the most common comments that come as a response to that is, well, the bank told me that I needed one in order to open a bank account. And what I also educate people on is the bank didn't issue you the EIN. And because they didn't issue you the EIN, the bank isn't responsible to make sure that you are in compliance with the IRS who issued you the EIN. And people have a hard time understanding that or digesting that, but it's the truth. We go to the IRS to get an EIN number, not the bank. So how can you be separate from something if your name is on it? And generally, this is something else that I want people to kind of pay attention to. If your name is on it, then generally that means that there's some sort of responsibility. So whenever you go get your EIN number as a single member LLC, I'm showing you an example of a EIN paperwork that I personally got in 2017 when I first opened my consulting firm, and it says Mac Enterprise Consultant LLC, and it has my name on it. This should be a very clear indication that there is no separation between the two. You cannot give this paper to anyone and then say, hey, I'm not responsible for it. The only true way to separate yourself from the business is to make sure that that business is a corporation. Because when you see the EIN number of a corporation, you tend to notice your name is not on it. And that's because, and I'm going to come back to this particular slide, but that is because according to the IRS, I'm going to go back to the EIN paperwork, screen, if you will. And I'm going to go ahead and select corporation. I'm going to go ahead and make my screen big. Because according to the Internal Revenue Service, whenever you select corporation, a corporation is seen as a person. So that is the only way that your business can be separate from you, is by having a business entity that's viewed as a separate person. And when we go deeper into that, whenever the IRS classifies a taxpayer, the IRS is very clear in regards to that particular statement. And it says, whenever the term United States person is used, the IRS is generally referring to a citizen or resident of the United States, a domestic partnership, or a domestic corporation. Hey, thank you for joining in. So, because the corporation is seen as a United States person, whenever you go back to look at the EIN paperwork, you will start to notice that there's a separation, right? Okay. So then we start to leave paper trails as a single member LLC when we have that EIN that's connected to us, and we start to leave those paper trails on the taxes that we file. So generally in the United States, as we know, individuals file their tax returns on the Form 1040, which is a U.S. individual income tax return. Well, whenever you file your business's taxes on the US individual income tax return, that should give you some indication that maybe something isn't necessarily what I thought it was. So when we go down on the Form 1040 and we start to place our income on line 8 of that 1040, it says additional income from Schedule 1. So when we pull up a Schedule 1, it says additional income and adjustments to income. Again, Schedule 1 is also attached to Form 1040. On line number 3, it says business income or loss attached Schedule C. When we pull up Schedule C, automatically right there at the very top of the page, the IRS further lets us know how they are seeing and viewing our business. The Schedule C is attached to, again, to the Form 1040. And at the very top of that Schedule C, it says profit or loss from business. But underneath that, in parentheses, it says sole proprietorship. Now, interestingly enough, you opened an LLC, but yet when you filed your taxes, the IRS is viewing you as a sole proprietor. Why is that? Well, the definition of a sole proprietor is a person who is the exclusive owner of a business. And if we pause right there for just a second, that means that no one else owns the business but you. You are the exclusive owner. You don't share in the responsibilities of anything. It is all about you. And then you are entitled to keep all profits after tax has been paid. I'm going to pause right there just a second again, because if you think about the times that you worked at a job and you actually received the paycheck, you were only allowed to live off of the money after taxes were already taken. And in the same context, as a sole proprietor, whenever you keep all profits after tax has been paid, there's a similarity between you and an employee, right? But then you're also liable for all losses. The definition of liable is responsible by law, legally answerable. That means that under no circumstances can there be a separation from the exclusive owner of the business that can keep all the profits and the legality of who's responsible. So when we go back to the Schedule C, before we can tell the IRS on line number A what type of business we are about to, present to them, or on line C, the name of that business, at the very top of it, it says the name of the proprietor. What the IRS is basically saying is, who is the exclusive owner of said business that will be responsible to keep all of the profits after tax has been paid, but will also be responsible for any of its losses. So after you enter all of your income and your expenses, on line number 31, if there is a net profit or loss, you are going to place this information on line 31, but you're going to also move this number to schedule. This is where, if you ever heard the definition of a pass-through entity, this is where this comes from. That means that the business doesn't pay any income taxes. All of the business's income, losses, and deductions are passed through to the owner. So this information, whatever that number is, whether it's a positive number or a negative number, is on 31. It also transfers back to the Schedule 1, which eventually comes back to the 1040. Now, remember in the beginning, I said on line number 8, additional income. Well, on line number 9, it says, of the IRS 1040, it says add lines 1, 2, 3, 4, 5, 6, 7, and 8. This is your total income. It doesn't say that this is your business's income. It doesn't say that, anything else other than your. And, from many of my scholars out there, whenever we look at the definition of your, it says of or relating to you or yourself or yourselves, especially as possessor or possessors. That means that it's all you. So whenever you assume responsibility for all of the business's income, losses, and deductions, there can't be any separation from it, right? And I'm gonna come back to that. But just as a commercial break, my name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting. We are a full service business consulting firm where we teach and educate business owners on everything about business. We help you open your business, we help you restructure your business. I also have an affiliate link where I'm selling a masterclass and teaching people on how to actually build their business. And for those who are interested in earning extra income, you can sign up at partners.macenterpriseconsulting.com, where you can earn a 25% commission on all of the services that people purchase, especially and including the masterclass. And I'll go ahead and show you that in a later discussion. So if I go back here, when we were talking about the disregarded entity and things of that nature, one thing that I want to kind of bring to you all attention is that, words have meaning, words have power. The definition of limited is restricted in size, amount, extent, few, small, or short. The definition of liability is the state of being responsible for something, especially by law. But it also says a person or thing whose presence or behavior is likely to cause an embarrassment or to put one at a disadvantage. That means when you are trying to operate your business by yourself, you are already at a disadvantage. And even our human anatomy teaches us that we need more than one. We have two eyes, two pairs of lips. We have two rows of teeth, two ears, two arms, two legs. Even the money that we spend on a day-to-day basis has two sides on it. So naturally, when we think about life and how life is designed, we tend to see that it takes more than one to even be a part of the game. So, as I've mentioned before, a single member LLC that is a disregarded entity and does not have any employees or any excise tax liabilities does not need an EIN. It should use the social security number of the owner. We've already discussed that. Now, one of the things that I want to ask yourself, and kind of consider this, right? Do you consider yourself a small business? Naturally, that's what people tell us, hey, we are a small business and things of that nature. But if we go back to the same context of words have meaning and words have power, we tend to see that the definition of small is of a size less than normal or usual, insignificant or unimportant. I would like to believe that when you opened your business, you didn't think of yourself as wanting to grow the business to be of a size less than normal or usual. You definitely didn't think about your business being insignificant or unimportant. And unfortunately, within the United States, we have a tendency to give one word multiple meanings. But the truth of the matter is, small means small. Whenever we're spending money, there is no such thing as a big dollar and a small dollar. It's just a dollar. And it's the same thing about business. You're either a business owner running a business, or you are operating and thinking that you're of a size less than normal. And if you think that way, then you're going to always be insignificant and unimportant. So which structure should you choose? As I've mentioned to you all before, the United States sees a corporation, actually disregarded and separate from the owner, right? That means, if we go back to the definition of disregard, I'm gonna go ahead and explain that for a second. That was a very good point. The definition of disregard, and I'm gonna go ahead and make it big for everybody to see, is to pay no attention or ignore. So when you see that, when you are a disregarded entity, that means that the IRS is saying we don't pay attention to you, or we ignore you as being separate from the business. We see the two of you all as one. And that's a very good point. So I'm gonna go back here, going back to the idea of how do you, separate yourself. For federal income tax purposes, a C corporation is recognized as a separate taxpaying entity. Now, I want to stop here for a second. Most people don't understand what's the difference between the C corp and the S corp. Well, it's a couple of different things. The S in S corp stands for small business. We've already discussed what a small business is according to this purist definition. But the other side of that coin is the S corp is a structure that cannot under any circumstances be opened at the Secretary of State, which means when you go try to open a business, you can't say I'm opening an S corp, because the S corp is a tax election. That means that you have a business and you want the business to be taxed as an S corp. The other definition of that, I'm going to explain it a little bit, but whenever consider this: whenever you are an employee, you have to pay federal taxes, Social Security, and Medicare. Whenever you are a self-employed individual and you make money for yourself, you have to pay federal taxes, and you also have to pay the self-employment tax. The self-employment tax consists of Social Security and Medicare. Naturally, when people are told that they should be an S corp, is to try to avoid the self-employment tax. Well, as a S corp, if you are the owner of an S corp, you still have to be an employee and pay yourself a reasonable salary. Well, we already know whenever you're an employee, federal, Social Security, and Medicare taxes are already taken out. All right. We've already discussed that a corporation is seen as a person. You are not responsible if you accept responsibility. We already discussed that. And let me go a bit deeper if I can. Any questions for the people that I have in here now? Any questions before I move on? Again, my name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting. And what we do is, as I've mentioned to you before, power of being in business for themselves. Right now, I have an amazing opportunity for people who want to learn how to build a business on my website, which is in the form of a masterclass. I went ahead and I've pre-recorded where you can take this class at your own pace. It's self-paced. I went ahead and pre-recorded 4 hour and a half long class. And the first class teaches you everything about a business plan. The second class teaches you everything about understanding the LLCs and their structures. The third class teaches you how to build business credit. And the fourth class teaches you how to go ahead and get business funding. Along with those 4 1.5 hour classes, I provided 3 ebooks. One of them is teaching you how to build your business. The other one teaches you how to build credit in less than 90 days by offering you a list of those creditors that will approve your company. And then the last ebook consists of a list of every business lender in every state that would allow you to go ahead and secure some business funding. And one of the things that I oftentimes educate business owners is how to build your business and put your business on the journey to success. And these are the 9 phases that I believe that has proven to be very beneficial, and also has proven to be the 9 things that every business owner has done to make them successful. Now, before I go deep into this, what I want to go ahead and preference is a lot of times people have a lot of these things already on this roadmap, but I want to caution you to understand that the things on this roadmap you have as an LLC, you're thinking that you're doing it for an entity that's separate from you, but you haven't. The only way to take this road to success is by making sure that the business that you have is separated from you. And then as it's separated from you, then you take into account all of these phases, and now you become successful. So I'm going to go ahead and go through each phase so that way everyone can understand what it is. Phase 1 is business planning. And generally what happens is you've decided that you wanted to open a business. And as you decided to open that business, the second step after you came up with that idea is to be able to go research the market to see if that business would even work in the area that you're in. After you've researched the market, you want to be able to come up with a plan on how you're going to actually run that business. And from an idea to research to planning, then you can go ahead and give that business a name. Now, here is the most crucial part of the journey that people take a detour and they go straight to business registration. And this is one of the fundamental mistakes people make when opening a business because they don't understand why is it that things just don't seem to be going in their favor. Well, whenever you go to open that business and you went registered at the Secretary of State, you ain't get an EIN number, you've already attached all of your personal information to these public records. And then immediately after you get your business open, you take another detour and you go straight to trying to get business funding. And now what happens is all of the data that is in the public records are mixed between you, the business, and things of that nature. So when you go try to get business credit and you're unsuccessful, that is because the creditors are saying, I don't know what information is true. You went to the Secretary of State and stated that, you know, you and the business share the same address and things of that nature, but when you're filling out this credit application, you're giving me some sort of virtual address and I'm just not sure what to believe. And then lately there has been such a very big push for people to go open a trust. So you go from step 1 to step 3 to step 5 and you go automatically to step 8, which is trying to get a trust. And you're trying to connect this business to some long-term endeavor. And instead of you now taking detours as you've done previously, you have completely taken a different road. And you went straight to the business trust, thinking that you are actually putting a separate entity in the trust that's going to protect you. And unfortunately, that has been a lot of people's mistakes in trying to run a business. And here we are, where how do we fix this? Well, let's go back to the beginning. The proper steps is to go in order. After we come up with this idea, business, before we go place anything in public databases, we want to make sure that we go right to phase 2, which is to give that business its own identity. Remember, the business is seen as a separate person. It's no different than you giving birth to a brand new baby. That baby needs its own address, its own phone number, its own email, and things of that nature. It's a separate being, it's a separate entity. So after you go ahead and get that business its own identity, now when you're ready to go register that business at the Secretary of State and get an EIN number, now what you're putting into the public database is all information that has nothing to do with you and everything to do with the business. Now, before you go try to seek credit, you have to be credible. And how do you become credible? And that's because you have to put yourself in the public view where people can find you. And this is where you start to establish your brand. What does your business stand for? Who is your business, right? You want to make sure that you have a website, a logo, a presence on social media. You've done some marketing. So that way, when you're trying to attract customers, you're actually giving customers a place where they can go find you. That's credibility. And then once you've established credibility with the public, now when you go try to get business credit, now they can go ahead and connect the dots to see that this is its own entity trying to establish credit with us. Everything seems to be fine. Well, after we do that, we are given a credit card, a fuel card. We start to make some some transactions. How are we keeping up with all of this information? Well, it's important that every business has some sort of bookkeeping process in place. This is where you get to be able to have like a QuickBooks or something like that set up. You want to make sure that you're reconciling all of those expenses and those transactions and things of that nature. Now, does it stop right there? Not at all. We want to make sure that not only are we credible to our customers, but we want to be credible to all of the entities that businesses use, which is SAM.gov, which is allows us to get some government contracts, the Better Business Bureau, the Chamber of Commerce. Now we're just adding that layer of credibility onto our business because we're doing some things, we're making some things happen. And when we're ready to do business with clients, we actually have some contracts in place. We have contract templates, non-disclosure agreements, confidentiality agreements. So now customers feel good about making a financial transaction with us because they feel that we are a reputable business. And then once we have that set up, we want to make sure that no one else can come and do anything that would harm the integrity of our business. So this is where we have to protect everything we have just built. We want to make sure that we have some insurance in place. We want to make sure that we have copyright, trademark, any type of patent applications done. Now we want to go ahead and set up that trust because now we have something for that trust to kind of protect. And then as we do that and we lock that in, all we do from that point on is just maintain everything that we've built. We start to build layer and layer and layer on top of that success. And then before you know it, we have 60-story foot building of our own, right? We are hiring the masses and things of that nature. And this is the journey that you should take. In any event, if you try to take a shortcut, you're putting yourself at a disadvantage. And I want to be the first to tell you that doing business is not necessarily hard. Doing it right is the complication. And many of us as business owners, we went straight from being an employee our entire lives into becoming a business owner. But who's teaching us how to properly run business? Hence, why I've put together this masterclass, because this class for $499 is the one way that I believe and confidently can say that if you want to become successful, you can become successful. The average business degree costs $10,000 or more a year. Textbooks cost anywhere from $500 to $1,500 a year. And before you know it, on a 4-year degree, you pay anywhere from $42,000 to $48,000 to learn how to be an employee. $500 teaches you how to be a business owner. And for any questions, you are more than welcome to log on to my website, which is www.macenterpriseconsulting.com. If you're interested in purchasing the course, you would just go to services, over services, click courses. And here you will be able to see where we have a membership program for $9.99 a month, where we teach classes to members only every second Tuesday of the month. And we also have our master class. And when you look at the $499 and the $9.99 a month membership, literally in the course of 1 year, you would have spent $620 to learn how to be an amazing business owner. $620 in 1 year that would teach you how to be a business owner that no university would ever teach you. I think it's an amazing idea. If you have any questions, you are more than welcome to schedule a consultation by clicking the consultation link on our website. We also offer free business assessments. If you want us to give you a free business assessment where your business is on that journey to success, you're more than welcome to click free business assessment. You also can click the free business guide. Teach you all things about the business, gives you a quick view, those 8 steps on how to be successful before you take any money from a client. We have a free business plan guide, et cetera, et cetera. We also have a ton of videos on this YouTube channel. You can find them, as well as these videos are linked to our website where you can find a ton of content. I also have tips. If you're interested, if you love to read and things of that nature, I write a ton of blogs. Understanding trusts and how to actually open what is a trust. I also wrote a blog on revenue versus profit, Also, stop letting people think there's so much information, the news and tips that, again, it gives you good reads. It actually teaches you and puts you in the mindset of becoming the best business owner that you can be. know, again, this is my first time doing a TikTok live on YouTube. So this entire version was me just wanting to make sure that I start to engage with the YouTube community. I've spent a lot of time on TikTok, so I'm going to be shifting between TikTok and YouTube, but I definitely want to engage more with the YouTube uh, um, followers and subscribers. So I definitely appreciate your time. I appreciate you listening. And again, if you want any help, we can help you at www.macenterpriseconsulting.com. If you are interested in becoming an affiliate where you can earn extra income, you would just go to partners.macenterpriseconsulting.com. And again, you can follow on all of my social media channels, TikTok, YouTube, and Instagram at Dwayne_the Mac. Thank you all for your time, and I look forward to engaging with you all more often. Thanks.